Hi, my name is Rick Adams, and I'm the CEO and founder at practicalcsm.com, and I'm also the author of Practical Customer Success Management. And this particular mini series is actually brought to you in conjunction with one of our customers, 111. 111 is Toronto's tech startup incubator, combining over 55,000 square feet of highly versatile office space, together with a wide range of business and technology services to service all of the needs of any technology startup in a simple and scalable package. Today in this Tech Startups mini-series, I'm going to be asking a couple of questions. What is customer success? And when should tech startups begin worrying about it? So let's make a start with that first question. What is customer success? Great question. Well, in fact, I'm going to ask two questions. What is customer success and what is customer success management? So starting with CS, customer success, well, the clue's in the name, obviously. It's customer success. It's the customer being successful. Specifically, it's the customer being successful about using our product or service. We, the supplier, we supply our product or service into the customer. They've then got to use that to generate some kind of value. Maybe it's going to make them more productive, or maybe it's going to increase their quality, or maybe it's going to help them bring more products to market more quickly, or distribute their products better, or whatever it is. So perhaps it's a marketing tool, perhaps it's an accounting or finance tool. Whatever it is that we're providing, that is how we need to be thinking about it in terms of measuring the success. It's the ability that the customer has to turn our product into something useful and generate an ROI. It costs them money to purchase our product and service. What does it bring back in return? Is it higher than the costs? Let's hope so. And if so, well, what is the proportion? What is the return on investment? That is customer success. What's customer success management? Well, that's like a formal process of trying to maximize that customer success and help the customer to do so. Generally, or traditionally, it's been up to the customer to work out how to make a success of our product. We give them the product, we shake their hands, wave them goodbye, and wish them good luck. Well, that's in the old world. But in the new world, it doesn't really work like that anymore, because generally speaking these days, and particularly if we're selling technology, we tend to be selling it as a service, in which case we want our customer, in fact, we have to have our customer renew our service on a monthly, quarterly, annual, 3-year, whatever it is, but on a end of contract basis. So let's say, for example, they sign an annual contract. Well, of course, it's very much in our interests that they re-sign that contract for another year at the end of this 12 months, and then again after 24 months, and so on and so forth. That's how we're going to grow our revenues, right? And this is really, really important to us as a technology company, is that our customers do renew with us. So suddenly, it therefore becomes very important to us, not just that they make the initial purchase, which is fantastic, and we are delighted to bring on board a new customer, but also that in 12 months' time, they look back at that 12 months and they see that they have got real value, success out of using our product or service. And so therefore, they are justified in making the decision to renew at the contract for a further 12 months or however long the period is, and therefore we get more revenues. So in the old world, of course, all the revenues came as a capital purchase initially. We didn't need to worry so much about that as a supplier. Now, as a supplier, we very much do need to worry about this, because we don't get it all up front as a capital purchase. Effectively, we get far less coming in, but it comes in regularly year after year, which actually has some cash flow benefits, but there is a risk out there that what if the customer changes their mind? What if the customer thinks it's a great product, but then doesn't implement it very well? I mean, it may be a great product, might be the perfect product or service for them, but if it wasn't implemented well, if it wasn't followed up, if it wasn't properly used and managed, well then, of course, in 12 months' time, the customer might turn around and say, look, sorry, we didn't get value out of this. I don't see the point in us signing this contract for a further 12 months. So this is customer success, and then customer success management kicks in. That's our bit as the supplier, as a professional services process, a best practice process, to go in and consult with the customer, be their guide, their helper, their advisor, to help them actually not just implement the product initially, but through the entire 12-month period, generate the maximum value from it as quickly as possible and as much as possible over the entire period. And as I said, there's best practice around that. So that's customer success and customer success management. That's what it is. So the other question we were asking, if you recall, was, well, when should tech startups start worrying about these sorts of things? I mean, is this sort of down the line somewhere, or should we be thinking about this, right from the get-go, or in 2 years, or what's the recommendation, Rick? It's a great question. And I'm not saying here, actually, that one size necessarily fits all. I would say that there are some variables that we need to consider. And I would say that the first thing that I would consider about this is the complexity of your offering, the service or the product that you offer. If you're selling me chewing gum, I don't need a customer success manager to know how to use your product. You put it in your mouth, you chew it. It doesn't require a lot of instructions or a lot of expertise. It doesn't require experience, having done it in lots of different situations, to be able to apply it to this new, slightly different situation. It's a different mouth, but you still unwrap it and you put it in, right? Start chewing. Well done. So in this instance, a very low complexity product may either need less customer success management or no customer success management. The second consideration is the maturity of your customer. How good are they at consuming your type of product or service? So if you've got very mature customers, perhaps quite mature organizations, they've been around a long time, they're quite large organizations, they're complex themselves, they've got lots of departments with lots of people in it who are very professional and have got lots of best practice already written down and documented and all the rest of it. And you're saying to them, well, we've got this accountancy software, or we've got this market research software, or we've got this XYZ software, and we're wondering how much help you need in getting it to the point when you're getting value out of it. Maybe that type of company, the larger, more resourced company, is going to say, don't worry about it. We are so used to implementing new software in our company. We know all about change management best practice. We're really good at taking new software, getting it implemented, getting our users up and running on it, and getting them to be experts in it very quickly. And we've got it all worked out. We don't need a lot of help. Maybe a different customer might give you a very different result. Maybe they would be saying, well, absolutely, we're completely new to this. We've never used software of this topic at all whatsoever. And of course, I'm saying software, you may sell something else. We've never used a product of this type whatsoever before. We need lots of hand holding. Yes, please help us to get the value, because we don't know what we're doing. So again, just to reiterate, two variables: the complexity of your product and the maturity of the customer in getting value out of that sort of product. So those are the two considerations that I would give in terms of asking the question, how important to my company is customer success management likely to be? I mean, customer success, definitely. Whether it's chewing gum or whether it's the most complex of complex things, customer success, we want the customer to be saying, yeah, that's fantastic, I'm getting lots of value out of this product. But do they actually need any help? Customer success management, that's when we consider the complexity of the product or service and the needs of the customer, the maturity level, the level of expertise that they have, whether they would like or need to have a lot of hand-holding and guidance, or whether in fact they're more of a DIY type customer who can manage perfectly well on their own. So with those things in mind, we need to consider then, well, what would be the impact in that type of situation, i.e. where there is complexity and perhaps where there is a need within customer organizations for some help to overcome that complexity and get value out of it. What happens if we don't put customer success management in place? Well, effectively, what we get is a higher churn rate. So a churn rate, as I'm sure you're aware, churn refers to the numbers of customers who purchase your product in year one on a renewable contract and who do not renew the contract. So the churn are the ones who don't renew, and obviously the renew rate is the ones who do. So if you've got, I don't know, 100 customers in year one and maybe 80 of them renew, well, then your churn rate is 20% and your renewal rate would be 80%. Nice and easy. So, of course, we want a high renewal rate or a low churn rate because next year it'd be nice to have all our customers renew and we'll get the maximum revenues from them. In fact, we can even go a little bit further. We can talk about something called NRR, which is net revenue retention. And what that's looking at is a more complex model, taking into account not just how many customers renew, but at what level they renew. Because quite often customers will take a fairly low risk option initially because they don't know if they're really going to make use of this product or not and how much they're going to make use of it. And is it really going to do everything that you said it was going to do for them? So they might take just a little bit of a dipping of the toe into the pool in year one and not purchase as much of your product as perhaps you would have liked them to on a sort of almost like a pilot or a trial. And if that works well, then there'll be less risk involved and we can make a more risky, as it were, decision next year to increase the amount. Okay, so we're building up over time the value of that customer to us as a supplier, because in year one they take out a small contract. We're going to try it just with that team. If they like it, then we'll consider in year two, having it for everybody. And maybe it goes really well, in which case maybe in year two you get 2 or 3 or 5 or 10 times the revenues that you got from year one. And in terms of churn or renewal, it's just a percentage of how many customers, but the NRR, that revenue retention, that includes that amount. So NRR is a more sophisticated figure and helps us to include this concept of not just how many customers, but actually what are they buying from us, and to include that increase. Maybe we've got a product where if we had, as the CSM, if we had put a customer success management in there, they would have seen all of that value and they would then be saying to themselves, yeah, let's buy 10 times the amount. Instead, maybe without the customer success manager, maybe they don't even renew. So not only have we lost the 100% of the amount that they bought last year, maybe we've actually lost 10 times that amount in what they would have bought this year had we have done a good job through customer success management. So you can see here how important customer success management might be. Think of it like if you imagine your revenues like water in a bucket, and you fill it in from the tap or the faucet at the top, and that's your new customers' sales going into the bucket. Well, of course, if you've got a big hole in the bottom of the bucket, that's like the renewals or the churn from people who don't renew or customers who don't renew coming out. Now, if the rate of that hole, if the hole is bigger than the faucet, then obviously you're never going to fill up the bucket. It's never going to be full because that you're losing customers at the same or higher rate than you're gaining new customers, and effectively you've never got any growth. Now, if you look at it the other way around, first of all, we can cork up that hole or at least reduce it. You're always going to get some churn. Okay, there's always going to be some customers who for whatever reason are going to need to walk away, nothing necessarily to do with anything you did wrong or that the product did wrong. It just wasn't a right fit, or for other strategic reasons they have to do something different now. But leaving that aside, you could even, having reduce the hole to the smallest hole possible for this bucket, so that the leak is small, so that when you've got the faucet going at the top, it's filling up nicely. You could also say that customer success management even adds another tap, pushing more water in at the bottom, because it's the renewal tap. So you've got your net new customers faucet, and you're turning that on as fast as your account managers and your sales team and your marketing team can help you to do. And then you've got a second faucet that you can turn on with your customer success managers, again, together with your account managers, working together then to increase the level at which existing customers renew by tenfold or whatever, if at all possible. And so therefore you've now got a bucket that's filling up very quickly. You're seeing growth within your organization. So those are the considerations. And I would add one other consideration to the question, well, is it the right time for us as an organization? I would say, what are your investors advising you? you will find increasingly now that your investors will have an opinion on this, and they will maybe be able to provide you with some guidance as to what their other companies that they are also invested in are doing, and what their expectation is from you in terms of when the right moment is to actually start building not just customer success, which is built from the ground up within your product itself and what you're doing, but customer success management, that professional services that surround it, that go out to provide the guidance and the instruction to the customer. And it may be that you could actually go a long way with something that was just purely automated and that was not actually requiring an employed workforce to do. So you can do a lot online, and you can do a lot with community. And maybe you can also double up the role with people initially, so that they are the account manager and the customer success manager, so that they are the technical support and the customer success manager initially. But as you grow in your needs, and sophistication and diversification of roles needs to take place, so that you have specialists who are excellent at what they do. And so once you're scaling up a little bit more, you then need to bring in that customer success management team. Then you've got to start considering, well, that's obviously an overhead. So we've got our overhead of the cost of employment of additional staff, and that's the big overhead. The cost of the equipment, the cost of management, and so on and so forth. So there's got to be a justification for that. There needs to be a business plan written and a proposal up to the top team to say, this is what it's going to cost us, but look at what it's going to give us back in terms of that NRR and reduced churn and increased value to our customers that's going to make them love us and come to us. And also, by the way, differentiation from our competitors, which is another great thing to think about. So I hope that this has given you, as tech startups, some food for consideration about, first of all, making sure you're clear on what customer success is, which you probably were, what customer success management is, that professional services best practice of helping customers to achieve maximum customer success in the shortest time period. And then also some of the thoughts and considerations that I might go through as a consultant, sitting down with a tech startup to say, well, look, is it right for us? And is this the right moment for us? So as mentioned, my name is Rick Adams from practicalcsm.com, and this has been brought to you as a mini series for tech startups in conjunction with our customer, 111. I hope you've enjoyed it, and we'll see you again in future episodes. Thank you. Bye-bye.